Hey everyone, this is Mayhem Talking Markets on Saturday, January 8th, 2022. We're looking at the QQQE ETF for the NASDAQ 100. This is equal weighted, which it looks at the price action for the 100 largest NASDAQ components, each one equally weighted at 1%. We can see this ETF has had an uptrend that started in June of 2020, was retested in September, again in late October, and has continued to hold until recently. While it was retested in December, it broke this last week in January of 2022. And that's a problem because it was tested, it was retested, it broke on a weekly close, and that shows me that in the tech index, there really is a lot of weakness. And I know the NASDAQ's not entirely tech, but it's pretty well dominated by it, so it may as well be a tech index. And we can see that it continues to weaken further, and at this point it has opened itself up to some pretty significant downside. If there isn't a corrective break back above this trend line very soon, then the path of least resistance is quite a bit lower. So I think that's a warning sign for everyone out there in the markets. We know that the Fed has talked about quantitative tightening now, and that's certainly a very negative recipe for tech stocks. It's something to be concerned about when you're in anything that's longer duration and higher beta and more rate sensitive, whether it's a tech stock, a growth stock, a biotech, a SPAC, crypto, any of that kind of stuff has the same sort of vulnerability to higher rates. So, you may see weakness across a lot of different charts. Speaking of which, we're moving over to ARK here. We can see that the innovation ETF had been in an uptrend that started in March of 2020. It ran all the way up until February of 2021. And since then, it's really had a consolidative and distributive pattern. Whereas, it had these lower highs, but also higher lows. And then eventually it finally made this lower low and then another lower low. And so this low that it's made recently actually brings it back to price action it hadn't seen since late 2020. And so that's pretty bad in terms of technical action. We also have a break below some pretty key support that happened recently. So the next level support is just about 79.44 on ARK. Certainly that doesn't mean that that is going to be support. It's just potential support. So be careful because this does look like a rolling top. It does look like it's a larger stage 4 decline potentially in the works. And if it is, that could bring a lot of the COVID premium out of this ETF. So, you look at where this thing was before COVID, and it's not impossible that you could see another 30, 40, 50% down in ARK before this move is over, especially if it is true that the Fed does not pivot back towards a more dovish posture. Looking into sentiment, we can see that sentiment has been kind of mixed. Volatility is not too high. Really haven't seen a lot of hedging put on in the first week of 2021. CBOE put call ratio, you have seen some nervousness there. It certainly shot up a bit. So there's more volume on the put side. It doesn't necessarily mean buying or selling. It just means more put volume. But it's still worth paying attention to, and often it is going to be at least more inclined to be on the buy side when you're seeing a lot of put volume. The SKU index is actually dropping off a little bit, so that's showing that there's not as high of a premium paid for puts as there was just a little bit earlier. So I think that's important to watch as well, because when that SKU gets low enough, it does impact the passive flows that can support markets. It also, as a result, has a sort of decompressing effect on volatility. We can see high yield spreads are pretty low, but they are starting to creep higher. So that's something to keep an eye on, especially with regards to looking at volatility within credit markets, and particularly treasuries. The MOVE index is still pretty elevated, so that's worth watching. Wall Street sentiment bears, we've seen a jump there. And this was in a level that was just above 20. Now it's above 60, so a near triple in bearishness on Wall Street. Retail bearishness is picking up a little bit too, but just basically about a 10% increase there. So you could call sentiment fairly mixed. The active Money Manager Index. This is a survey that's done every Wednesday. You could see that last week it was 85, the week prior 67, the week prior 52. So we've seen a steady increase, and now it's 89. The reason that matters is because in prior episodes where it was very high, that preceded pretty significant declines, not only in the number, but also in at the surface level in the index and underneath in some of the stocks that really get hit when we have these corrective episodes. So, watch out for numbers that are above 90 in the survey, and especially above 100. They usually indicate sentiment extremes, and we're not there, but we're approaching that area. Real yields continue to rise throughout January, this first week of trading. Today they were pretty flat. There was a little bit of a rise on the shorter end of the yield curve, a little bit of a drop on the longer end, but overall this week they've more than doubled from the low to the high, and that is something to watch because that's going to put pressure on long duration, higher beta assets like growth tech, crypto, biotechs. It also has a negative impact on things like precious metals and other debt. Looking inside this chart from Bloomberg, bound to bonds, it's claiming that higher bond yields have tended to favor the value strategy over growth for performance. And we can see the correlation between the 10-year Treasury yield and a value portfolio that Bloomberg has put together. So that's very interesting because as we go late cycle, you do see the tendency for higher yields. So this is Mayhem talking markets with just a quick market update. There'll be more updates coming both from my YouTube, my Twitter, where the handle is Mayhem4 Markets, Mayhem for Markets. We also have a website that is marketsandmayhem.com. And I'm also happy to announce I just partnered up with Horse Lover Fat to launch TraderAid.com. That's TraderAde.com. So check out the description for more. I'll have links to everything. And until next time, this is Mayhem. Hope you have a great weekend. Signing off.